Hey everyone, thanks for joining us for another episode of Peaks Money Talk. And on today's topic, of course, you know we talk everything to do with your investments. Today's topic is GICs. That's Guaranteed Investment Certificates. Thanks for joining us, and today, Guaranteed Investment Certificates is our topic, and let's get right to it. First off, GIC, nothing to do, it's not, it's guaranteed, not anything to do with the government, or is it?
It's guaranteed by a form of the government.
By a form, because I always I look at it like a GIC. It's not a government investment certificate. It's a guaranteed investment certificate. Okay, what does that mean? What's a GIC?
Well, a GIC is guaranteed by the CDIC.
Which is what? Wait, look at all these acronyms.
Oh,
I always get after you guys about all these acronyms.
That's what we have to have. We live by them.
Yes.
And so they guarantee that what you put in, you will get back as a principal. But what it really amounts down to is the money is guaranteed, the rate that you're going to get is guaranteed, and you pay tax on it all. That's the way it is.
So would you say, like, we're talking like if someone was not, like, enjoyed minimal risk, would you give them a GIC? Does that have anything to do with it?
Yeah, it's someone like, somebody that should invest in something like that should be somebody that wants absolutely no risk in the markets. They are happy for the amount of money they have, and that it will take them through retirement, because you certainly don't make a lot from it. Because of the guarantee, you got minimal gains with that.
What are the benefits then of doing it?
You're guaranteed your principal.
Yeah.
Okay.
You will not lose your principal, and because they've got it CDIC approved, so as a result, your principal is always guaranteed. And everybody that was involved in the 208 fiasco with the markets going down to somewhere in the neighborhood of 45%. There's people now, especially risk-averse people, that really don't want to take a chance, and they say, I'd be better to get 2.5% than I would be to lose 45%, even though that may never happen again. Who knows? But it's a case where they have to feel comfortable with what they invest in.
Mm-hmm. So, okay, and again, can you review who offers GICs?
Well, any investment institution will offer that. Banks will offer it.
Okay.
A lot of people will use it, maybe not on its own, but a form of safety within their whole portfolio of funds. Say, as they get closer to retirement and they need the security or the money's available, sometimes we'll put it into a GIC that we know in 2 years or 1 year that the money will be available, plus they get a little bit of interest in the meantime.
Yeah, and it's a little bit. So, like, let's say you put $16,000 in, and in a few, now the other part too is you're not going to put your money in and take it out right away. It goes in increments of, how does that work? Is it annually or quarterly, or I forget how?
Most of them are annually, going up to a 5-year span.
Okay,
but the one thing I would suggest to people, and this is from the advisor point of view, is check out that there's anybody that's got GIC rates. Use the best one. If you have dealt maybe at your local bank, sometimes you don't get the best ones there. Check it out. And, it doesn't seem like much, but 10 or 15 or 20 basis points on a 5-year GIC on $100,000 is quite a bit of money.
That's not bad. If you can put in a lot, you can get a lot. Like, you can make, if it's thousands, you can make a couple hundred. If it's 100,000, you're going to make a couple of thousand. I got to get my calculator and do the math on this, don't I?
But just check it out, and just don't go for granted that you're going to get looked after by the place that you are. Check out the rates, because that's what it's all about. If you can make 10 basis points or 20 basis points more somewhere else, take it, because you don't get shares from a bank or try to anybody else because you're nice to them.
Yeah. Where do you recommend people check it out? With their financial advisor, or like online
financial
somewhere?
Advisor. Yeah, check it out with your financial advisor for sure.
And ask for advice from them.
Right.
Okay, anything else to do with the GICs, gentlemen?
No, I
Ooh,
think
we covered it here.
And we covered it. There's only thing that you will know is there's two types of interest rates. One is simple and one is compounded. Simple is paid yearly and compounded is paid at the end.
Which, at the end of the 5 years?
Yes.
Oh, or whatever
Yeah.
the end of the
Of the term that you have
okay.
chosen.
See, I keep learning all the terminology, the speak, the financial advisor.
The lingo.
The lingo, as you guys will say. Yes. Excellent. Okay. Anything else?
No.
Okay, all very valid, good points. And if you have any questions, I mean, I keep raising lots of questions here, but if you have a question, Lloyd Nathan will definitely answer your questions, whether it be through an email, but we can also message you back on Facebook or on YouTube, wherever you like to put that message in, they will answer you. And who knows, your question could lead into a future episode of Peaks Money Talk. Thanks for watching, and we'll be back again next week.